Hey everyone, it's Evan here from the Trade Risk on Friday, March 31st here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some sector analysis. I hope everybody had a great week trading. Let's get into the action here. S&P 500 finished down 55 cents here on Friday. That's minus 0.23%. You can see almost an inside day. I think we did just poke our heads up a bit above yesterday's highs and then finished back in the midpoint of yesterday's range. More importantly, today is the end of the week, end of the month, end of the first quarter of 2017. So let's take a look at that higher time frame, the monthly chart first. This is actually the first red close since October of 2016. So we were down 1.73% right before the election, October of 2016. And then we went on a 4-month winning streak here, putting up some nice gains on those winning months. And then this is the first slightly down month, completely controlled, down minus 0.31%. You can see we were down a bit more earlier in the month, but the bulls did come back and save us. And if we go down to that weekly time frame, you can see finished up almost 1%, 0.8% on the week, and again recovered from the lows of this week very nicely. So back down to that daily time frame, we've already covered sort of the start of this week, but to refresh it real quick, we had that almost 1% gap lower on Monday. We saw that completely reversed, closed near the highs, got all of those losses basically back by the end of the day. We then had a nice follow-through day on Tuesday, up 73 basis points on the day. Wednesday was sideways, but still holding up. Yesterday made more upside progress, and today, again on Friday, a slight inside day, giving back just a bit here of Thursday's gains. So going forward, what we're looking for is to see if the bulls can continue to stabilize this market, if they can continue to hold us up at these upper levels. Ideally above 235 would be the absolute sort of strongest position for the bulls going forward. If we don't lose this trend line again, and again, it's still a little bit of a skew there from the dividend. If you go to the cash market here, you can see 23.55, a little more leeway here. That's really the support level we want to pay attention to. If we can hold on to that into next week and continue to firm up on it and then eventually lift higher, then all signs are golden for the bulls. Buyers will remain in control, and we will effectively be in our very familiar V-shaped rally off of the washout here from the past 2 weeks of selling. Now, if we start to break down, this is going to be, again, the first reference point, the first line of defense around 23.55. If we start to break down below there, you're going to start to look, we'll go back to the SPY here because most people look at it. If we start to lose, this 235 general area, 233, this is going to be, the next kind of major level to pay attention to, or the next most significant level would be right in here. And then, of course, it gets a little more dicey as we start to come back down and retest the lows from Monday. And then, it just gets a little thin as we start to move back down here. Again, a longer term consolidation pullback isn't anything dramatic given the amount of ground we've covered on the upside over the past 6 months, 12 months from 2016 to now. But, for the short to intermediate term, in order to remain as sort of constructive, bullish, and momentum driven as possible, we want to see us hold above these key levels that we just outlined above. Now, some people will make note of the volume. Yes, we are, climbing a bit here on lighter volume versus where we sold off. I'm not making a big deal of that just yet. For me, I'm more interested in market breadth. How are we responding on the way down and up? And actually, if we look at the close today in the S&P 500, if you were to look at the cumulative NYSE advanced decline line, we're actually higher in that indicator. It's actually broke to new all-time highs here on Friday versus where we were all the way up here. So in other words, breadth via the advanced decline line is actually at its strongest it has been all year or all time ever. So that's a constructive piece of information. That's something I pay a little more attention to than volume right now. If this continues to play itself out with the volume really weakening and pullback starting to really strengthen on upticks in volume, then I'll start to take notice of volume. But for now, I'm more interested in breadth, more interested in watching these price levels. And I think the hard work going into next week is going to be where we are right now. I think we got our nice oversold bounce in here, 4 days up, or one reversal day and 3 days up. Now let's see if the bulls still have fuel in the tank. Let's see if they can continue to stabilize us. That's what I'm going to be paying attention to heading into next week. And again, if we go to that cash market, you can see kind of bumping up into this trend line, just barely tagged it today. So you can see that's potentially what the market's responding to up here just a little bit as it comes back in and works through this prior supply. So that's the S&P 500 as far as how we're positioned, how we're playing it. We lightened up a good amount on Friday, actually. Did some selling as we sort of talked about and navigated through our positions through this recent pullback last week. We were doing some buying, we were doing some accumulating on these days down here while maintaining a S&P 500 short hedge, which allowed us to still have that long exposure on, but stay hedged via the market. And as this started to rally, we took that hedge off, we let those positions run, and we started to do a little more selling in some of those positions today, lightening up. So still very much on the long side position, long, but less than we were coming into today and yesterday. So that's the way we're positioned. Let's look at some other markets here. Russell 2000, a little bit busy with all these trend lines I have drawn in here, but we had this downtrend line that we snapped above really yesterday, and then we continued above it today, although couldn't quite hold on to the highs of the day. But still, the IWM saw a really strong snapback here, which is encouraging because this has been the laggard on the year. And note where it found some resistance today is right above 138, which has been sort of a long-term critical level to look at over the past several months in this range. So 138, that's going to be the mark to take, for the bulls to reclaim. If we go to the weekly chart, this kind of smooths out the action a little bit. You can see really just came from all the way from the bottom of this range, arguably undercut that range, and then rallied all the way back up to the top of it. And still, again, from a structural position, still haven't broken out yet. We made nice progress this week. The bulls came with a nice defensive save, but now we need to see if they have any offense, available and can really take us, break us back above this 138 to 139 level. That's going to be the real sort of interest there. So that's the IWM, nice rally on the week, and the NASDAQ 100 finishing off at new weekly all-time closing highs, and it looks like we got not quite daily highs because we finished down on the week, but we did get new all-time closing highs in the Qs here. So trying to, again, you can see kind of reclaim this accelerated trend line where it's finding some struggle right there as of right now. And this was the trend line that we were trading in for about 3 or so weeks, broke down from 2 weeks ago, and now we're just trying to reclaim that. But regardless, still a tremendous amount of strength here. The fact that we're up here at all-time highs in the Qs is just speaks to the strength, the leadership in this subset of stocks. So that is the rundown. Still think you can stay optimistic. Bulls still holding on to it, staying resilient, and we're going to see if they can do that heading into next week. Now, if we get into some of the other major markets, we'll go to TLT. A little bit of a push snapback here on Friday, up 30 basis points on the week. Flat pretty much. Started the week off a little bit stronger, and then we slowly kind of faded off those highs. But again, so far, bulls still staying constructive. Fast-moving averages still below price, and coming back up and trying to just bump up and hold at these slightly longer-term resistance area in here around 122 in the TLT. So bulls still trying to hold on to that trend short-term, weekly chart, and some of this major resistance still right above us. If we go to oil next, this certainly helped save the market and help bring some strength back into the market as USO rallied 5.5%. This should not have been really that much of a surprise or new sort of development here. We've been all over this oil story and this potential trend line and some of the levels and action points that we've been talking about on the blog and in these videos. So we did see a nice snapback. That's constructive to see. Again, off the lows, undercut just a little bit there, and it looks pretty good here for a nice bounce. Now, is this just a relief bounce? Is this a snapback? Is this a retracement on this new bear trend that we potentially are developing in? That's yet to be seen. That's the bigger question. But for now, we have some momentum to the upside. Let's stick with it. Let's measure the shorter term levels and pay attention to it. So bulls got it. If we start to lose, 1040, 1035 and dip back below into here, then suddenly we're back on the fence and in the more neutral zone. So nice snapback in oil. Natural gas continues to rise in this channel here, maybe getting a little sluggish over the past 3 days. You can keep an eye on this trend line that's extending from the March, really the February lows here. And if we start to break below that, maybe you get some type of, aggressive sell entry there, or maybe not so aggressive given this longer term impulse leg from January down to March is to the bearish side. So keep an eye on that for natural gas. And GLD, let's talk about that. So metals staying, how did they finish this week? Yeah, it was pretty much a flat week. Started off pretty strong, and then they kind of tapered off and just, pretty quiet digestion sort of week. If we were to zoom out here, you could extend this trend line down here from the July highs all the way down to where it is potentially influencing price right now. So again, that does coincide with the highs here from late February. Ultimately, 119, 120. This is a pretty important zone breakout, either horizontally or from this trend line. Either way you look at it, so keep that on watch for now. Short term, the trend remains higher, so bulls still getting the job done in GLD. And silver's pretty much the same story. This gap up is still kind of holding here on Monday as far as the ETF goes, and the bulls are hanging in there, getting a little sluggish, a little lackluster in its movement over the past 4 days, but still above the 8 and 20 period, still got some momentum there. So it's tough to really fault silver right now. There's definitely some momentum behind it. So those are the metals. Let's get into some of the individual sectors. IYT had a nice snapback this week, recovered this support right here at 162. Those were the lows around January. It broke above this trend line here and made a nice recovery, made a nice needed recovery, because this one was really sort of falling off and diverging and sort of lagging over the past, over March really. So nice to see a bit of a snapback there. It was up 2%. On the week. So that one, it's certainly nice to get back above that support level. Energy, no surprise here as oil bounced 5.5%. We also got a nice move here, 2% in XLE. This was something that we were in playing some of the individual names, also in the levered ETF, which we got involved with here on Tuesday. We're out of the rest of that position. It was a quick, just multi-day trade, and we do still have some names in the energy space still on. So XLE, nice to see it back above the 69 level, above this trend line. Let's see if it can hold now after undercutting these lows here this week. Is constructive. Be nice to get this sector working again. It's definitely 7-8% off of the highs from December. So that's XLE. Semiconductors, still working, still just grinding up, through this channel here. No real change. Maybe you could argue it's getting a little sluggish here, a little, hesitant to break new highs above this $80 level. That's something to pay attention to. This has been a tremendous leader, so this could be the canary here that if it starts to roll over, that might be your clues as, something could start to really unravel here with markets as a whole, but still yet to be seen. We've had some dicey situations in the past with a couple of these pullbacks, but the dip buyers continue to step in. So nothing too much to worry about, just a little bit of hesitation there to keep our eye on. If we go to XLY, discretionary, all-time highs here. We can thank Amazon for that. That continues to work. XLV, a little bit vulnerable here, still paying attention to this because I do, I've been wanting to get involved in healthcare as a position, either some of the other individual components or even the XLV or the ETF Cure is the 3X Bull ETF, but still just paying attention to see how this is going to respond. It still seems reluctant to reclaim, the lows here in this little resistance. So are we going to roll over and make a second leg lower, or do we get some momentum and kind of break out to the upside? I'm paying attention to that because I still think it's a pretty interesting area to pay attention to right now. And I think that's it. I think that's the last I had for ETFs or for sectors. So enjoy the weekend. Thank you so much for watching, and hope to talk to you again soon.